Hi, everyone. This is Tanya Miramontes, and I'm back at it to answer some questions and talk about some tax topics. And I'm going to be focusing on taxes right now because it is tax time and people are doing their taxes. So why not just focus on the taxes? And also, if you have any questions you want me to answer and you want to just send them to me anonymously or just send them to me in like a direct message, but you don't want me to say your name, I can totally do that and keep it anonymous. No worries there. If you want to ask a question and you want to know if feminine products are a tax deduction and you don't want me to say that you asked it, I won't say your name. And guess what? They are a tax deduction. That changed. And you can include feminine products, menstrual feminine products as a qualified medical expense and deduct it if you have enough medical expenses. And usually most people don't. You have to have a lot. And first of all, you have to be able to itemize your expenses. And then second of all, you have to have it be more than 7.5% of your income in order to make a difference. So a lot of people don't have that many. But if you do have a lot of medical expenses, then add in those feminine products because it's a tax deduction now. Anyways, tax topics. Let's get into some tax topics. All right. So good news and bad news. Which one do you want? Bad news? Good news? I'll start with the bad news. Working remotely. So a lot of people have been working from home. And a lot of people are employees working from home. And unfortunately, you can't get any tax write-offs for being an employee working from home. They used to allow it. They used to allow unreimbursed employee expenses. So, you're an employee, you spend money and the company didn't reimburse you, you get to write that off. Well, they got rid of that. That changed. So there is no more of that deduction for employees, unfortunately. But for businesses, and if you're self-employed, if you're an independent contractor, if you're a partner in a partnership, and you're working from home, you can still write those things off, and you can write off a portion, business use of your home. And it's just a portion. So if you have 1,000 square feet and 100 square feet is your office space, then it's 10% that you get to write off of your rent and all that stuff. So unfortunately, it's not for employees, and it sucks. You're supposed to get reimbursed by your employer. That's the thought process there. And if you own a corporation and you're the employee of your own corporation, you also can't write it off, technically. You're supposed to get reimbursed by your corporation. And, and it gets a little tricky there because then it can be considered a fringe benefit. If the corporation is like paying a lot of your personal stuff, that can get a little tricky, and you're supposed to include that in your income, and it's a fringe benefit, and it gets a little tricky there. So that was the bad news. You can't write off your home office if you're an employee working from home. The good news with the stimulus checks, that we got, $1,200 and $600, if you didn't qualify because your income was too high in 2018, 2019, if you made more than $75,000 being single, if you made more than $150,000 being married, and you didn't qualify for the stimulus checks, you have an opportunity to qualify based on your income for 2020. So now that you're doing your 2020 taxes, if you made less money, then you can claim those stimulus checks and get that money. So that's good news. Bad news if you made less money, but good news that you can still qualify for these stimulus checks based on your 2020. So there's that. Also, I want to mention about IRS scams. There's people that, message me and it's like, oh, I got a call from the IRS. Like, what is this? I'm scared. So here's the deal. The IRS is not going to call you. They're not going to email you, and they're not going to text you. If they want to contact you, they're going to send you a letter in the mail based on the address that's on your most current tax return. So they're going to send you a letter. They're still doing snail mail. So no matter if you get a call, you get a text, you get an email, ignore it because it's not true. It's a scam. So just keep that in mind. Okay, let's move on to some questions and answers. So the last one I talked about charity deductions. And so a lot of people had some questions about the charity. So BB asked, does charity apply to a site like GoFundMe? So here's the thing with GoFundMe. With GoFundMe, people can create fundraisers and you can contribute to their fundraiser. If the person that created the GoFundMe account, the fundraiser, is a qualified charitable organization, so if they're, a 50C3, a tax-exempt nonprofit organization, if they're the ones that created the fundraiser and you're contributing to their fundraiser, then yes, it is a tax deduction. But if it's just, some family that needs help and you are helping them and you contribute to their fundraiser, then technically it's not considered a taxable charitable donation. With that being said, do I think the IRS is going to audit these $300 that are being allowed to be a tax deduction? No. Okay, that's all I'm going to say. So Sven asks, can I roll over my charitable donations to next year if I have over $300? So that was the deal. In 2020, they're allowing people who don't have enough to itemize and just take their standard deduction to write off $300 for donations. But if you spend more than that, then you can't. You can't roll it over, and it's just good for you. You're a good person. You donated, but you can't use it to roll it over. You have to spend another $300 this year in 2021 for it to count for 2021. So, but if you itemize, there's no limit. Like if whatever amount you donated, that's what you donated. And you can write off non-cash stuff. So if you took clothes to the Goodwill or donated household items, you can calculate the thrift market value for that, the thrift shop value, and deduct it if you itemize. If you're not itemizing, then you get the $300 for 2020, and they're allowing for 2021 to do $300 for the taxpayer and $300 for the spouse. So you'll get $600 for 2021 if you just take the standard deduction for donations. So keep that in mind and find some charities that you want to, support and support them. I think it's a great thing. So now we have the last question. Cynthia asks, I just recently opened a Roth IRA and transferred some money from my 401k and wanted to know if there are any tax consequences to doing this. So let's talk a little bit about a 401k and a Roth IRA. So a 401k, you put money into it without paying any taxes on that money. So it's pre-tax. With a Roth IRA, you have your money, you already paid taxes on it, and then you contribute to it. So it's post-tax. And if you make less than $140,000 a year, you can contribute to a Roth. Like I would say, get a Roth IRA, like have a Roth, contribute to it, because the money you contribute to it, as it's earning interest and dividends and gains, when you take it out after you're 59 and a half, it's tax-free. You don't have to pay taxes on that money. All the gains that it accumulated over the years, it's all tax-free. So that's great. I think it's a great type of investment, for retirement. With a 401k, when you take the money out later, it's all going to be taxed. So you have to include it in your income. You're going to get this 1099, right there. I can't. This 1099-R that will show how much money you took out from your retirement. And with a 401k, if you take it out, whenever you take it out, it'll be reported on there. You will have to include it in your income, and you're going to pay taxes on it. Also, if you take it out early, before you're 59 and a half, you are going to have to pay a penalty on that. It's like 10% for federal, and a little bit for state, for California anyway, 2.5% for California. For 2020, the CARES Act, they got rid of that. So no penalty, no early withdrawal penalty for 401k. That was in 2020. I don't know if they're going to continue that in 2021. That they haven't, as far as I know. And so at least with her question, she transferred from a 401k to a Roth in 2020, half of her money. So she's going to get to have to include that in her income, but she won't get a penalty. But she's going to have to pay taxes on it. The good news is she still has some money in her 401k that she can transfer. And I say transfer that into a traditional IRA. You're still going to get this 1099-R. You're still going to get that 1099-R right there. And it's going to show, that it's going to be a rollover. So if you go from a traditional 401k into a traditional IRA and just roll over the money, then no taxes, no tax consequence. It's just a rollover. Don't have to worry about that. Because a traditional IRA, it's treated the same way as a 401k. You can contribute to it, but when you take the money out, you're going to pay taxes on it. And that's that. So a lot of information there with 401k, Roth IRA, traditional IRA. If you have any more questions, let me know. As far as what to invest it in, once it's in there, that's where the certified financial planner comes into place and somebody that knows investments. I just say, buy some stock, play around a little bit. But if you don't want to be too risky, don't be too risky. I don't know, talk to somebody about how to invest in that. And I also have people that you can talk to if you need a referral. So let me know. So those were the questions. Those were the tax topics. I'm going to look at the chat to see if anybody put anything in here. Okay, so on Periscope, we've got Exploring Earth asked that they heard that they're giving $3,000 per child as a tax credit. Is this true? So the child tax credit for 2020 is, oh geez, how much is it? I think it's $2,000. It's $2,000 for 2020, but it gets phased out. If you start to make more, like $200,000 for single people and $400,000 for married, you you lose that deduction. So that's what it is for 2020. For 2021, they are increasing it. And I don't know if that's final yet, but they're like in talks to increase it. So, let's just keep it. There's all these like tax changes coming out and they want to like help out people. But, this article, February 9, it says Democrats push forward with a temporary $3,000 child tax credit. But some want to make increase permanent. So it looks like it's getting pushed through. So for 2021, hopefully that increases to $3,000. And it's $3,600 for children under the age of 6. So let's hope that passes, and let's hope that's permanent, because that's awesome. That's great. That's a good tax credit for having children. Hope that answered your question, Exploring Earth. The other question from Penthouse is, can I file my taxes over the phone? I have never heard of you being able to file your taxes over the phone, except if you're working with somebody like a tax person that just says, take a picture of your stuff, send them to me. Let's get on the phone and let's just finish your taxes. Yeah, you can file your taxes over the phone. I've helped people where I never even, met them in person. It was all through email. And if we didn't need to talk, we talked on the phone. But you will have to send over documents. Like, you can talk about it over the phone and get it prepared. But your actual tax documents need to be given to the person who's helping you file your taxes over the phone. So either if you take a picture of them and email it to them, take a picture of them and text it to them, they need to see those tax documents before they can file over the phone with you. So that's my question there. Let me know if you have any follow-up questions. So that's it for today. I hate that these are really long. So I know your time is very valuable, and a lot of people do not want to be sitting here watching these long videos. Even myself, like, I, flip through stuff, and if it's more than 2 minutes, it's like, oh, it's too long. Or more than 5 minutes, it's too long. So that's why I'll put the timestamps and stuff, but maybe I'll change it up going forward and see what I can do to keep these shorter. And so they're not so long. But let me know what you think. All right, that's it for today. Thank you so much. Have a great day. And